This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. The IRS started accepting income tax returns on January 26, 2026, marking the official start of tax season. But heading into 2026, taxpayers faced uncertainty. The Tax Cuts and Jobs Act was set to expire at the end of 2025, which would have triggered a massive tax increase, approximately $4 trillion over 10 years, as rates, deductions, and credits reverted to pre-2017 levels. Then in July 2025, Congress passed the One Big Beautiful Bill Act, which not only made most of those cuts permanent, but added new tax breaks for 2025. The question was, how much would that actually show up in people's refund checks? By mid-February, we're finally getting answers. As of February 6th, the IRS reported that the average tax refund was $2,290, up 10.9% compared to $2,065 at the same point last year. The IRS has already issued 7.4 million refunds totaling $16.95 billion. Private sector economists estimate that up to $100 billion in higher refunds could be issued this filing season, with average refunds potentially up between $300 to $1,000 compared to typical years. The reason for bigger refunds is the One Big Beautiful Bill Act. The law reduced individual income taxes for 2025 by an estimated $129 billion. For 2025, the standard deduction increased to $31,500 for married couples filing jointly and $15,750 for single filers. Seniors aged 65 and older can claim an additional $6,000 deduction, though it phases out for higher earners. The cap on state and local tax deductions jumped from $10,000 to $40,000 for 2025 through 2029. And for the first time, certain workers can deduct tip income and overtime pay from their taxable income. There's one critical change everyone needs to know. The IRS is phasing out paper refund checks, meaning most taxpayers must now receive refunds via direct deposit. If you don't have a bank account, you'll need to open one or face delays. The IRS also emphasized that refund numbers through early February don't include millions of earned income tax credit and additional child tax credit refunds, which are held until after February 15th by law. That means refund totals will surge in the coming weeks. Tax refunds are genuinely bigger this year, not just because of overwithholding, but because Congress cut taxes for 2025. Lower-income Americans tend to file early, while wealthier households with more complex returns take longer, so average refunds typically start small, peak in mid-February, then decline slightly through the end of tax season. The biggest benefits flow to middle and upper-middle income groups, while lower-income filers with little to no tax liability don't benefit, and the very highest earners are ineligible for most new cuts due to income limits. The trend is clear. This is the first filing season reflecting major tax cuts since 2018, and millions of taxpayers are seeing the impact in their bank accounts. If you're filing now, expect a larger refund than last year, especially if you have kids, are over 65, paid significant state and local taxes, earned tip or overtime income, or bought a car with a loan. Seniors benefit from the new $6,000 deduction, and taxpayers with dependent children benefit from the larger child tax credit. But if you don't have direct deposit set up, you could face delays getting your money. Most refunds arrive in fewer than 21 days for those who file electronically with direct deposit. If you're self-employed or have complex investments, you might not see much benefit yet. Many of the business provisions don't kick in until 2026. Looking ahead, starting in July 2026, parents can open Trump accounts for children under 18, with a one-time $1,000 government contribution for babies born between 2025 and 2028. And beginning in 2026, the value of itemized deductions is capped at 35%, creating a 2% tax on itemized deductions for those in the top bracket. The IRS releases updated filing season statistics every week, with the next major data release expected on February 27th, covering refunds processed through February 20th. That update will include millions of EITC and ACTC refunds, and should show whether the projected 1,000 average refund increase holds up. If you haven't filed yet, gather your documents now. The April 15th deadline will be here before you know it. And if you're planning to claim any of the new deductions for tips, overtime, or senior status, double-check the IRS guidance to make sure you qualify. This is the biggest tax change in years, and getting it right could mean hundreds or thousands of extra dollars in your pocket. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.